Welcome to PSRM Fundamentals Overview. Here we will be starting with an introduction to this set of classes. The purpose of these classes are to give you a freely accessible overview to the main functionality of form-based taxes within PSRM. Within PSRM, we have different types of tax functionality. And the main and most important one is the form-based taxes, those which are triggered by a tax form. All type of assessments, obligations, and penalties are based upon having a taxpayer filing a tax form, and these are the types of taxes that we are going to be dealing with. And we're going to be using a sales and use tax form to describe the functionality we have within the system. There are other types of functionality, other types of taxes, bill-based taxes, those which are triggered by a bill, a yearly bill like a property tax or a municipality tax or a vehicle tax. And these are also found, as I said, within PSRM, but will not be covered in this particular series of lessons. First of all, we are going to look at the main registration entities. We're going to look at the person and accounts and other obligations and tax rolls that are needed to basically have a taxpayer. We're going to then show how we have registration forms and tax forms which can create these entities and can create assessments as well. So we're going to be dealing with registration forms to create the taxpayer, and then we have a tax forms to create those assessments and charges as well. And we're going to look at the life cycle of these forms, because most of the entities that we have within PSRM have a life cycle, a rich life cycle, which go through different stages, and there are many ways of going through a life cycle of a tax form where you can either reject or you can actually create an audit and other aspects which we will be covering as well. After we're looking at tax forms, we're going to be looking at the main financial transactions which tax forms create, and those are assessments using adjustments, and adjustments have a financial transaction related to that. We're looking at those, and we'll be looking at payments as well. And those are the two types of two main financial transactions that we'll be covering. After we're going to be dealing with that, we're going to be looking at penalties and interest. If you file late or if you do not pay on time, there might be interest, there might be fixed charges for as I said, for failing to file or failing to pay, which are going to be added to your charges, to your balance. So that, and the mechanism of setting and configuring P&I will be discussed and shown. Then we are going to look at the two types of case management which deal with the balance of an account and how we can influence it. If a taxpayer does not pay, we will try to influence and try to get collections from this taxpayer by using, we have an overdue process, and we have something called a collection case, and we also have pay plans as well, and I'll be describing those. And then in a situation when a taxpayer has overpaid for any particular reason, there is a whole process of dealing with that overpayment, offsetting it to a different obligation, or whether we actually create a refund to that person either through check or a direct deposit. That will be covering in the overpayment process. After that, we were looking at other types of case management, including audits which deal with whether we want to actually look in more detail at a particular obligation and a particular tax form, and then we want to change the assessments on it, and we will need to deal with something called suppressions as well, which are related to audits and other case management. And then appeals. If a taxpayer needs to appeal against a particular situation and charge or an audit, there is a mechanism in place, case management for that, and as well as for bankruptcy, to discharge let's say, and write down a particular obligation completely, or whether we want to dismiss it, we have case management for that as well. So now an overview of the lessons that we have planned for you. In this lesson, we just introduced the basic functionality that we'll be covering and explaining that we were dealing with the form-based functionality within PSRM. In the next lesson, lesson 2, we will be exploring the user interface. We'll be opening the application and logging in and look at the overview of the menu structure, the help given within the application, how you navigate from page to page, the different page structure that exists, and different types of pages that we have within the application. Once we've done that, we'll be ready to actually get going and create our first entities, and we will be creating the registration entities that are necessary. We'll create a business person and account, and on top of that we'll have a sales and use tax role and obligation. Once we've completed that, we'll go on to lesson 4. We will be creating a registration form, and the registration form will do the same thing that we did in lesson 3 and create through that registration form those entities that you need to create a taxpayer. So we'll be using a business registration form, and we will, as I just said, we'll be setting up a taxpayer for sales and use. In lesson 5, we will be introducing a tax form as opposed to the registration form that we saw in lesson 4. Look at its life cycle, the form type related to it, form rules, sections, and lines. We'll also be looking a little bit about form upload staging, mentioning it. We will be creating a sales and use tax form. The sales and use tax form will create assessments and payments on top of that pre-registered taxpayer that we set up in lesson 4 through the registration form. After we've completed that, we will create an adjusted tax form, make changes to the assessment amount, and then we will also add onto that another type of tax form, an amendment, and see how that works. In lesson 6, we will be looking at financial transactions, and the main financial transaction that we deal with within PSRM is something called an adjustment. We will describe specifically what an assessment is, a particular type of adjustment, and also explain how adjustments are split by debt category. We will be showing that by way of creating a manual adjustment within the system, as opposed to a tax form in lesson 5 that the tax form itself created assessments. We can actually add in manual adjustments. And we will see that you can set it up that it needs an approval process through a supervisor if the amount of the adjustment is over a certain threshold. Once we've done that, we will turn our attention to payments in lesson 7, and we will introduce how payments are added in the system and how they are allocated to the different debts, and how they pay off the adjustments and assessments by way of something called dynamic credit allocation. We will see that specifically by changing something called the debt category priority. We will be creating a manual payment in this lesson as opposed to the payments we saw directly in the tax form, and we will see that you can direct it to specifically to a particular tax form. We will already have been introduced before lesson 8 to P&I, to penalties and interest, but here we will turn our attention in more detail to see the configuration of penalties and interest, P&I, how they are set up, and to see also how changing dates like the filing date and the payment date affects P&I. We will be seeing that there's an opportunity to waive P&I if you want to by creating something called a waiver, and we'll using an example of removing interest charges in this example. So that's lesson 8. In lesson 9, we will turn our attention to collections and a set of different cases that allow and try to encourage the taxpayer to pay the tax authority. We have a few of those types of cases, overdue process being the most important one. And then we will move on to a collection case. We will see in our case that an overdue process can actually trigger a collection case. And there are other types of cases like pay plan as well, which can encourage taxpayers. And eventually what we will do in our example is write off the debt as part of the overdue process. In lesson 10, we will turn our attention to overpayment process, where the balance of a particular obligation is in credit and the ability to actually refund that credit to the taxpayer, either through a check or a direct deposit. We will be looking at the ability to, before refunding, offsetting, paying back a different obligation that is still in debt before refunding the money. And we will be looking at specifically at the entities we have in the system: overpayment process, refund control, and bank events. In lesson 11, we will be turning our attention to suppressions, how they're created and what they affect and how they affect different entities and processes. We will be specifically looking at how a suppression can stop an overpayment, and it moves the overpayment into an on-hold status until the suppression is released. And we'll be looking at P&I, how P&I charges can be suppressed, and once cancelled, they are can be added back on. But if the suppression is instead released, those P&I charges are for that particular period are actually suppressed forever. So we'll be looking at suppressions. We will then turn attention in lesson 12 to audits. We will take our example where we have a particular obligation that is in debt, or perhaps still in credit, but we will audit that particular tax form and add on a new assessment by creating an audit case and adding a particular type of tax form, an audit tax form, which will create a new assessment and add it to the obligation. Taxpayer can appeal against different things within the system, and we have an appeal case management object which we will discuss in lesson 13. It introduces concepts like a review process and also uses suppression that we learned about in lesson 11. We will be creating an appeals and seeing the life cycle of that. In lesson 14, we will be looking at what happens if a taxpayer enters a bankruptcy state. How does he prove his bankruptcy from the courts, and the different stages that you have to go through with the life cycle of the bankruptcy in order to eventually, if the bankruptcy is accepted by the tax authority, to discharge the debt which is remaining on the obligation. So that is lesson 14. In lesson 15, we'll just do a quick summary of the main lessons that we have learned and the main functionality of the system.